The Dow Jones just plunged more than 1,100 points in a single day, marking its longest losing streak since the 1970s. Yes, you heard that right. This is a historic moment that could reshape the financial landscape for months to come. But what's really happening here? And how does this impact your investments, your retirement plans, or even the economy at large? Stay with us until the end, because we're diving deep into the key factors driving this market turmoil and revealing how you can position yourself for what's ahead. Let's start with what triggered this dramatic sell-off, the Federal Reserve's latest announcement. On Wednesday, the Fed delivered a widely expected quarter-point interest rate cut. But here's the twist. It also revealed plans for just 2 rate cuts in 2025, instead of the 4 previously projected. This signals that tight monetary conditions could last much longer than anticipated, and that sent Wall Street into a frenzy. The Dow plummeted by 1,123 points, a whopping 2.6%, in just one day. This extended its losing streak to an astonishing 10 consecutive days, something we haven't seen since 1974, during Gerald Ford's presidency. For historical context, the last time the Dow fell for this many days in a row, the US economy was grappling with skyrocketing inflation and a deep recession. And it wasn't just the Dow that took a hit. The S&P 500 tumbled 3%, while the Nasdaq Composite dropped an even steeper 3.6%. These numbers show just how shaken investors were by what experts are calling a hawkish cut from the Fed. Many had hoped for a smoother, more optimistic outlook on interest rates, but the reality turned out to be far more sobering. Here's the kicker: just a day earlier, traders were 98% certain that the Fed would cut rates again at its January meeting. Fast forward to Wednesday, and that confidence plummeted to just 6%, according to Fed funds futures data. This abrupt shift in market expectations highlights just how volatile and fragile investor sentiment is right now. Now, let's zoom in on what's specifically dragging the Dow lower. First up is United Health Group, a key player in the healthcare sector. The company's stock has plunged 15% this month alone, following the tragic fatal shooting of its CEO, Brian Thompson. Although United Health's stock rose slightly on Wednesday, its earlier decline has had a ripple effect, weighing heavily on the index. Then there's Nvidia, the tech giant that's been a market darling all year, with its stock soaring over 180% in 2024. But even Nvidia isn't immune to this turbulence. It's down about 5% over the past month, contributing to the Dow's overall decline. Despite this string of losses, there is a silver lining. The Dow Jones is still up 14% for the year, climbing more than 5,000 points in 2024. But the big question now is, where do we go from here? Before we dive into the outlook, take a moment to support the channel by liking this video and subscribing. Your engagement helps us continue bringing you daily updates on the world of finance, ensuring you're always informed and ahead of the curve. Thank you for being part of this community. So, what's the key takeaway from this historic moment? The market's reaction underscores growing uncertainty about the future of interest rates and inflation. As Chris Zaccarelli, Chief Investment Officer at Northlight Asset Management, put it, the market was underwhelmed by the likely future path of interest rates. Translation: investors are starting to doubt whether the Fed will ease financial conditions quickly enough to support a robust economic recovery. Adding to this uncertainty are external factors like geopolitical tensions, corporate earnings, and shifting investor sentiment. Earlier this year, markets surged on optimism about regulatory reforms and tax cuts, but those gains are now being tested by today's challenges. Here's what you need to watch for in the coming weeks. Will the Fed stick to its cautious stance, or could new data on inflation or the labor market force a shift in its approach? And how will investors react as these dynamics continue to evolve? Now, we want to hear from you. Do you think the Federal Reserve is making the right call by keeping monetary policy tight? Or do you believe it's a mistake that could hinder the economic recovery? Share your thoughts in the comments section below. We'd love to hear your perspective. As always, thank you for watching. Stay tuned for more insights on the latest in business, finance, and the global economy. And don't forget to hit that notification bell so you never miss an update. See you in the next video.